China's 2024 growth hits target with stimulus boost, but challenges persist. The UK economy shows sign of recovery after decline driven by services and construction sectors. And we'll examine the cost of rebuilding Gaza following the long-awaited ceasefire agreement. Hello, I'm Rome Saidi with the latest business and finance news here on TRT World. China's economic recovery gained momentum in the last quarter of 2024. The government stimulus measures have played a pivotal role, lifting annual growth to meet official targets. Now, despite progress, challenges remain with weak domestic demand and external pressures. China's fourth quarter GDP grew by 5.4%, surpassing market forecasts of 5%. This marked a rise from the 4.6% growth in the third quarter, reflecting the impact of September's policy shift. Now, full-year GDP growth for the 2024 reached 5%, aligning with Beijing's target. Now, mainland China's CSI 300 index edged up 0.15% following the positive GDP data. The Chinese offshore yuan strengthened to 7.3 against the US dollar, while the 10-year government bond yield dropped by 2 basis points to 1.6%, showing market optimism. Retail sales in December rose by 3.7% year-on-year, exceeding expectations 3.5%. Industrial output expanded by 6.2%, outperforming forecasts of 5.4%. And these gains contrast with a 10.6% decline in real estate investment. Urban unemployment rose slightly to 5.1% in December from 5% in the previous month. Now, disposable income for urban residents grew by 4.4%, lagging behind rural income growth of 6.3%, indicating income inequality remains a challenge. Well, for more, we're now joined by Farah Murad in Dubai. She's a senior analyst at the Equity Group. Good to have you in the programme. So you've got a slew of positive economic data, but what's really driving it?
Thank you, Mariam, for having me. And I believe we should have expected to have better than expected numbers, especially in the last GDP, in the last quarter. We had priced in the threats from Donald Trump, and too many companies, I believe they were trying to maybe benefit as much as they can from the current tariff levels so they wouldn't be affected in a much higher way once the tariffs become a reality. Also, we need to remember by the end of the year with December, it's a holiday season, consumption worldwide peaks. And that's probably another maybe important effect. It had an important effect on having a better number. So this is why exports came better than expected. Industrial activity came better than expected, but local demand, it's still facing major issues.
And Farah, then, what about jobs then? Are people actually willing to spend?
In China, that seems like a major concern. Now, I want to discuss something that usually maybe we try to avoid, but it's the yuan currency and depreciation that we've seen. It's now on very low levels. And in order to boost consumption, some consider that this is a bad step to do. But we need to also remember, whenever we have lower yuan, then the demand would shift to local products, like the demand would shift to the local products. And I think that's what's somehow happening. This depreciation of the yuan, it's not being hailed or it's not being supported. But on the other way, we see that they're benefiting from it, either to rebalance potential higher tariffs. We believe maybe a depreciation of 7 to 10% on the yuan might help exports to rebalance any tariffs that would come the Chinese way from the US. Another thing, maybe the demand would shift to local products, and that's something to consider. I don't think it's going to support demand that much. I think the demand will remain an issue in China for 2025, but a weaker yuan have two sideways to consider.
Okay, I guess we'll have to wait and see. Farah Murad in Dubai from Equity Group, thank you so much for joining us on the programme. Over to the UK now, where the economy is growing again. Services and construction have played a big role, but challenges still remain for businesses and industry alike. Now, the UK economy grew by 0.1% in November after 2 months of decline. Bars, restaurants and construction projects helped drive the small improvement. The growth comes amid ongoing financial market pressures. Now, IT services also played a key role, led by commercial developments. However, some areas like manufacturing and oil and gas production have struggled. Now, overall growth was less than analysts had hoped for. Now, business, rentals and manufacturing face declines. Experts believe these sectors held back a stronger general economic performance, and the overall figure was weaker than economists had expected. Now, meanwhile, businesses are concerned about rising costs and upcoming tax increases that are coming up in April. Employers warn that these changes could limit their ability to hire and raise wages. And looking ahead, growth may face further challenges in the months to come. Well, for more, we're now joined by Steve Keen, who's an honorary professor at UCL in Amsterdam. Steve, it's a good to have you in the programme. So does this 0.1% growth in November, what does this actually indicate? Is this a sign of a resuscitating UK economy, or is this just temporary?
I think it's temporary, and the government's doing everything it can to turn that into a negative number. All the stuff that Rachel Reeves believes is going to boost growth is actually going to inhibit it. So there may be private sector headwinds as well at some point, but the main headwind the UK economy faces now is the UK government.
Right, and so how can struggling sectors, like manufacturing and oil and gas actually be supported then? What are the levers?
Well, the main lever is to create government fiat money. And this is the crazy thing about the policies which the Labor government is implementing now. They're obsessed with reducing the deficit. But the deficit, the excess of government spending over taxation, is how a government creates what we call fiat money. Now, what she's doing is removing fiat money creation from the system, leaving only credit money as a possible way of financing businesses like this. And they can't, therefore, cover their costs or investments out of cash flow. They're likely to invest less. So what she has to do is abandon the obsession with eliminating the deficit, which, when you look at the economics of it, is actually removing the creation of fiat money from the system. She's telling companies to grow faster in real terms while she's reducing the money supply, and that just doesn't work.
So you don't think Rachel Reeves is on the right page at all?
No, well, the trouble is she's not the right person because she trusts the economics textbooks. It's not her fault that she's been badly educated. And she makes a great fuss about the fact that she was an employee at the Bank of England. Well, in 2014, the Bank of England came out with a paper called Money Creation in the Modern Economy that said the economic textbooks were wrong about how private money is created. Now, they also tell her the sort of things that she's doing right now are a good idea. If you read one of the textbooks like ManQ, it tells you that cutting government spending boosts investment. Now, they were completely wrong about private money creation. What are the odds they're correct about government? She's naive enough to believe economic arguments from textbooks. And I'm part of a group of economists which for a century or more have been saying they're simply wrong on how that occurs.
And so, Steve, then, the UK is facing, of course, rising costs, and then also you've got this April tax hike. So how is this going to impact then the ability to hire and also perhaps to increase people's wages?
Oh, they've put every impediment they can in the way of people actually being hired by firms, putting up the whatever they call the tax they put on employers for employment. That's going to increase employment? Give me a break. It's going to reduce it. And by reducing the cash flow in the economy, you don't get real growth as a result of that. You get people cutting back on their spending even more. So it's just completely wrong economic policy. And this has been hitting us for decades now under Tory as well as under Labor. But the irony now is that you have a treasurer who works for what is supposed to be a social democratic Labor Party and believes that cutting back on disability payments and letting pensioners freeze is going to boost the economy. Even at that point of view, it's going to mean pensioners and disability sufferers spend less, which is going to reduce the economy.
Well, I guess we'll have to wait and see who actually gets it right then. Steve Keen, honorary professor at UCL in Amsterdam, thank you so much for joining us.
Thank you. Welcome.
Meanwhile, Turkey's Treasury and Finance Minister Mehmet Şimşek is holding meetings in London along with a conference at the Bank of America. Now, during his trip, Şimşek will engage with prominent global fund managers to discuss investment opportunities for Turkey. Major Turkish companies have also been invited. Lou has more.
Turkey's Treasury and Finance Minister Mehmet Şimşek has attended the Bank of America Securities Turkey conference in London. The last time it took place was in 2018. Some 250 investors took part, a first in the event's history. Şimşek was joined by Turkey's Central Bank Governor Fatih Karahan and representatives from major Turkish companies who met with potential investors to showcase Turkey's potential. During his first meeting, the minister underlined Turkey's resilience against increasing geopolitical tensions.
Our diplomatic missions, role in global affairs, refugee policies, and pioneering position in humanitarian aid go on to show Turkey's soft power. And at a time of rising protectionism, our free trade agreements with 54 countries, including the EU, demonstrate our resilience against trade fragmentation.
Turkey and the UK are long-term trade partners with a strong economic relationship. Total trade between the two countries was $30 billion in 2024, an increase of 1.4% from 2023. Total UK exports to Turkey amounted to almost $11 billion, while imports amounted to $20 billion in 2024, an increase of 5.7% from 2023. Turkey is also the UK's 17th largest trading partner, accounting for 1.5% of total UK trade. Both the UK and Turkey are working to upgrade their trade agreements to benefit both economies. It's understood that following Brexit, Turkey has become an increasingly important trade partner for the UK. And following free trade deals, agreements underlined by visits like this one, it looks like there will be more business to be done between the two countries in 2025. Tülay Kalyon, Haznedaroğlu, TRT World, London.
Now for a quick look at some of the other business stories from around the world. Well, US retail sales rose by 0.4% in December, falling short of expectations and marking a slowdown from November's revised 0.8% increase. The slower growth reflects a cooling in consumer spending as the year ended. Spending at restaurants and bars, the only service sector category in the retail report, saw a 0.3% decline, the largest drop since 2024. The US Federal Trade Commission has reached a settlement with General Motors banning the automaker from providing drivers' behavior and geolocation data. The settlement will bar them from sharing sensitive data for 5 years and require clear consumer consent for data collection. The agency found that GM had been collecting driver behavior data, settling to insurance companies. Oil giant BP has announced plans to cut 4,700 jobs. That's more than 5% of its global workforce. It's part of a plan to save $2 billion by the end of 2026, with $500 million of those savings expected this year. The company, which employs approximately 90,000 people worldwide, has not disclosed how many of these roles will be affected in each country that it operates in. And Nintendo stocks took a hit, falling by 7.2% on Friday. That was after the company's announcement of its next-generation Switch 2 offered few surprises to investors, but experts say the stock could still rebound closer to April, when Nintendo is set to unveil more details in an online presentation. Outgoing US President Joe Biden highlighted the suffering of Palestinians, calling the past 15 months hell. A three-phase ceasefire in Gaza brokered in Doha aims to end bloodshed that has claimed over 46,700 lives and also deliver that most important aid. Now, while Hamas supports the deal, some Israeli hard-right lawmakers oppose it. While incoming President Donald Trump claims credit, but Biden attributes the breakthrough to his team. Ahmed Al-Shahabi reports.
At long last, the Gaza ceasefire has been shaped. Qatar, Egypt, and the United States are happy to announce the success of joint mediation efforts in order to reach a deal between the parties in conflict in the Gaza territory to exchange prisoners and hostages, and a return to a prolonged truce that achieves a permanent ceasefire between the two sides.
Shortly after the announcement in Qatar, US President Joe Biden took credit for the deal.
Good afternoon. It's a very good afternoon. Because at long last, I can announce a ceasefire and a hostage deal has been reached between Israel and Hamas.
Turkish President Recep Tayyip Erdogan has welcomed the Gaza ceasefire deal. In a statement, he said, "We hope that the agreement will be beneficial for our Palestinian brothers, our region, and all over humanity, and will open the door to lasting peace and stability." Hamas considered this ceasefire a new failure for the Israeli ruling coalition.
The Israeli criminal occupation was confronted with the steadfastness of our Palestinian people who have held fast to their land. The Israeli army has achieved none of their secret or announced goals in Gaza. The people of Gaza have been the shield for the resistance fighters. The Qassam and other Palestinian factions have proved to the world that they are heroes. They have fought to the last moment of this war in Gaza. They conducted courageous operations against the Israeli army. They inflicted heavy losses on the Israeli military vehicles, making them child caskets for the Israeli soldiers.
With the approval of both sides and the negotiating parties, working is underway to complete all executive procedures in the coming hours. The first phase of the agreement, which will last for 42 days, will witness a ceasefire and withdrawal of the Israeli forces to the east and away from the populated areas to be stationed on the borders in all areas of the Gaza Strip. It also includes intensifying the entry of humanitarian aid and its safe and effective distribution on a large scale throughout the Gaza Strip. Under the first phase of the agreement, Hamas will release 33 Israeli detainees in exchange of a number of Palestinian prisoners in Israeli prisons and detention centers. But on the ground, the bombing has not stopped. Some 20 Palestinians were killed after the Doha ceasefire announcement. And as the mediators are pushing Israel to halt the already planned attacks on Gaza, no one knows yet whether this ceasefire will hold. Ahmed Shihabi, TRT World.
Now, when the ceasefire comes into effect, the cost of rebuilding Gaza will likely run into the billions of dollars. Infrastructure has been destroyed. There's an urgent need for just basic necessities. The rebuilding of Gaza faces huge challenges, from clearing rubble to restoring education and healthcare, underscoring the war's deep impact on Palestine's future. Now, Gaza's reconstruction begins with the clearing of 42 million tons of rubble, estimated to cost $1.2 billion alone. Now, some of this debris is, of course, hazardous, contaminated with asbestos and other poisons, and even contains human remains. Now, this presents long-term health risks. Clearing all of it may take as much as 14 years. Now, 2/3 of Gaza's buildings, or 69% of its structures, are damaged or destroyed. This includes over 245,000 housing units, leaving 1.8 million people in need of emergency shelter. The rebuilding process could stretch beyond the year 2040. Now, essential services as water, roads, electricity, well, all of these are badly damaged. Only 25% of pre-war water supplies remain, and 68% of roads have been destroyed. Over half of Gaza's agricultural land is degraded, exacerbating food insecurity for the population. The war has also devastated 136 schools, 823 mosques and 200 government facilities, so halting public services. Only 17 out of 36 hospitals are partially operational. Access, as we know, to healthcare is critically strained, and the destruction further isolates Gaza, complicating recovery and aid efforts. Well, for more now, we're joined by Nasser Mashni, who's in Sydney, and he's the president of Australia's Palestine Advocacy Network. Good to have you on the programme. Now, we know it. Gaza's reconstruction is going to kick off in the sort of third phase of this deal. But we know that the scale of this destruction is so massive. So where do you even start?
It's unimaginable, Maria, and thank you very much for that very thorough summation of the devastation that has occurred in Gaza. When can it start? The reality is it should be starting immediately, should have started days, weeks, months ago, but it can't start. It can't start until we have some accountability, until the genocideers that perpetuated this Holocaust onto the Palestinians are held to account. This is going to require country-level international intervention. And in the past, whenever Israel has gone on one of these murderous rampages, what they do is profiteer from the reconstruction of the damage that they wreak. All of the reconstruction materials are channeled through Israel, where their companies profit from the construction materials, their companies profit from the concrete sales, the steel sales. All the while, the destruction is paid for by the American government. It's beyond shameful. I can't even imagine what a project manager might look at this and say, how do we rebuild it? It's unimaginable, the toll that's been taken out.
So when it comes to, companies profiting, how could that be managed? What safeguards can we put in place to stop that?
Well, the first thing we need to do is lift the siege. The reality is that the profiteering will happen by the Israeli government. They'll have an opportunity not only to Holocaust the Palestinians, but to profit from the rebuilding of Gaza, because they determine, because of the air, land, sea blockade of Gaza, everything that goes into Gaza has to go through Israel. And so they profiteer through port fees, they profiteer through supply of. When a Gazan wants to buy concrete, he has to buy it from an Israeli interlocutor. So what we need to do is lift the siege, and Palestinians in Gaza should be able to go to the free market and purchase those rebuilding materials, and or aid be delivered directly to the Palestinians. But that requires a lifting of the siege, and that requires the international community to come together and demand that siege to be lifted. And as we've seen, the international community seems to be impotent in the face of Zionism, the Israeli fascism, and the United States.
But let's come to the everyday realities, of what we're facing right now in Gaza. There's so much rubble. Some of it is, of course, hazardous, but you also, of course, have these human remains that are inside all of this rubble as well. So how can that be cleared? I mean, how quickly do you think can that be cleared? And also, it will have to be done with a lot of empathy as well, given that we have people, or the remains of people, still trapped under all of this rubble.
The scale of it is unimaginable, Maria. The estimates are if you had 100 trucks working full time, it would take 15 years to clear all of this rubble. That is as being as empathetic as possible, dealing through the health challenges of asbestos, etc., but also the human remains. What we need to be doing is creating the pressure internationally to treat Israel like the rogue pariah state it is, and force Israel to pay for the damage it did in this Holocaust. As Germany has been paying and has paid reparations for the Holocaust in World War II, Israel must pay reparations for the repair and re-civilization, the reconstruction of Gaza. It's past time to hold this regime to account.
Well, let's hope that this reconstruction, can start in earnest. Nasser Mashni, live for us in Sydney, thank you so much for joining us.
Thank you, Maria.
Incoming US President Donald Trump's threats to impose sweeping tariffs is expected to weigh heavily on Asian economic growth. Now, even before his election win, experts were forecasting a slowdown in exports. But how far the levies go present the biggest uncertainty for the region. Well, Jamie Santrizo reports now from Beijing.
It's no secret Chinese electric vehicles are dominating globally. 2024 was a record-breaking year, with sales surging by more than 40%. Chinese EVs now account for more than 2/3 of the global market share.
How far ahead are Chinese EV brands? I would argue 2 generations. There's even examples of cars that are being released that, to my eye, look more modern than some of the prototypes that are being released by non-Chinese companies at car shows.
Along with batteries and solar power, Chinese EVs have become part of the country's ambition to transition to high-tech growth and a critical export. But the sector's in Washington's sights. Last year, the Biden administration quadrupled tariffs on Chinese EVs to 100%. Under Trump, the US is expected to harden its stance even further. Such moves could put the brakes on what's become a key driver for China's economy. EVs aside, Trump has threatened to impose tariffs of more than 60% on all goods from the country.
It is quite clear that China is growing out of exports. So consumption is really weak, investment is really weak. So what really drives the Chinese economy now is just export. So of course, tariffs from Trump would massively impact the Chinese economy.
The pressure is expected to reverberate throughout export-reliant economies in Asia.
Parts of Asia did benefit from Trump's initial trade war with China as companies shifted production away from the country. But broad-based tariffs this time around could inflict pain across the region.
Oxford Economics predicts non-China Asia will be a net loser, with exports falling by as much as 8%. How much pain there is will depend on how far Trump's tariffs go, and critically, whether he'll target markets China is rerouting its export through the US.
That's why we really need to see which approach Trump is going to take in terms of tariffs to the rest of Asia.
Experts say while Asia as a whole could hurt, some will weather the storm better than others. How the US diversifies its supply chains could separate winners and losers.
Apple has started producing iPhone in India. There are lots of semiconductor companies that moved to India. There are lots of manufacturing is happening through Vietnamese market. There are lots of manufacturing has moved to Bangladesh. So you will see the gradual growth in all these countries.
With limited reliance on Chinese manufacturing and shared strategic interests with the US, India could benefit in the long term. China, meanwhile, is readying itself for a fight and looks set to deploy stimulus to defend itself. But experts say it'll need to be far-reaching to offset what could be a turbulent ride for Beijing with Trump in office. Jaime Santirso, TRT World, Beijing.
And that's all of your business news for now. Thanks for watching. The Newsmakers is coming up next.